Ahmed, thank you very much for being here today. It's a pleasure to have your participation here in our retreat. We have members from all over the world, here in Abu Dhabi. Can you give an overview for someone that's just arriving now and watching us from any part of the world to tell more about you and your organization, please?
My name is Ahmed El Rabbat, and I'm coming with an engineering background. Studied law, then I moved into the finance studying and the economic behavior. I am with MRBF for almost now 7 years or more. It only become that consolidated entity last couple of years as a part of the steps that we have taken to make sure that we are putting ourselves on the right track to evolve and grow more and more. MRBF is being established, as I said, from the consolidation of the separated operated entities. If we put it in a right way, it used to be as every family business that used to be in operating in verticals. None of them are talking to each other, and lack of governance in place. I mean, it was like a family thing. So it's like a real estate mainly, and a lot of stuff that used to be done in a very traditional way. So the assignment or the discussion with the shareholders and mainly with the chairman and the team was to, okay, what we need to do to move forward. The plan was to have like 3 major steps to be taken. First of all is to just make sure that everything is reaching its highest efficiency while it's being operated, and to try to spin off whatever is not working, make sure that everything needs to be turned around, to be taken care of, any kind of data restructuring to be taken place, and find synergies between all of these verticals. And this was the first step. The second step was to enhance and implement these synergies to make sure that we are maintaining the down line of the cost and the high line of the revenue, to make sure that we are working and making the right equation between the revenue and the related costs through this synergy. The third one is to create and bridge the gap between the family office and the family business. It's like a big gap that used to be taking place in every family office transformation process. If I put it in a very simple way, the family office used to be created through aligned interests. Some of the family members decide to do something, and actually they used to act as GPs. If they are having this wealth, it used to be done through a specific success that the family has experienced one day. That means they had the operations experience. They used to be as a GP. And then the only way to have it scaled is to put it in a form of business. So family business is mainly to scale up whatever the money to be in place and try to expand more and scale up whatever the businesses are. And the third one, which is somehow when the founders are getting up and somehow the traction is getting less in terms of the businesses and the scalability and risk appetite, if we put it rightly, the role of the family office comes, where most of the shareholders of that specific family office used to be very much conservative in their looking into the investments and the steps and the risk appetite. This is the whole thing. If we are putting in a very, very high level way, our rule is to create the platform that allows the business of the family to grow up and to also meet the conservativeness of the family members who want to make sure that the risk is not high. And to bridge this gap, we were trying to make like a structure in place that has the 3 major elements: the governance that is ruling everything related to the family members, their engagements, their ability to run the businesses themselves, or to just depend on a third party and get a neutral and right decision in place through getting like individual who are not family members only looking at the specific investment to be taken care of or to be just a spin-off. And the second step was to just put in place the foundation or the structure that is transferring or allowing the businesses to continue as it is in a very somehow homogeneous and automated manner, despite the absence of any of the family members. So that's why we have come up with instead of the trustees, to just make sure that we are still in control and the family members, whenever they are capable to, are engaging themselves into the decision making about the investments. And for tax purposes as well, you know that the foundation used to be treated as individual rather than being a corporate. And the third one is to find a way to receive the third party investments. So that's why we wanted to have this, all of them under one umbrella, which is mainly the holding entity that runs the family businesses, which is the operating businesses, and the investment vehicle. The investment vehicles are, for us, we've seen after many exercises that has been done, to be like funds, and that's why we have created 4 funds in ADGM. So, for example, we have subscribed in these funds cash and cash in kind with a great value of seed assets. The chairman has contributed his hospital here, his pharmacy, his clinics in place into that specific fund, and the strategy in place to have that in progress to be scaling up or to grow. This is somehow away from whatever the family owns. What you need is to just manage the expectations of these investors and putting in place something that you have already built over the last 20 years. Similar thing in the real estate and similar thing in the real estate development.
It's a very big challenge to go from a family office perspective almost to become like an institution. And I can only imagine how much work it was behind this whole process.
It's more into convincing that it's okay. It was quite challenging to just put in place the structure that allows this, but it wasn't that much hard to explain and discuss that this is like in a form of institution rather than just being as a family office.
Where are the regions in the world that you consider the most relevant ones for you, or those that would be open in your books for investment?
We are into 4 major industries. One is the healthcare, where we have the assets of the healthcare hospitals. We are running them, so we have the expertise. And the second industry that we are operating is the real estate. Whether it's like real estate management, we have multiple and large number of units that we are running here in Dubai. And also it's under which we have the development department where we buy lands, develop and sell, under which also we have a full construction division. I mean, the main contracting, factories for many other stuff. So you have a full complete like real estate industry expertise for more than around 39 or 40 years almost. And the third one is mainly into the hospitality, so the fine dining and some hotels. As I said, we have the expertise in these 2 industries where we used to run for decades, but in the hospitality, we are not running. So that's why there was a specific restriction that has been applied on this, which is the minority shareholding. We like to own a minority shareholding for this to be into our portfolio, being like, we are talking about Dubai, we are talking about the stable areas where the hospitality map or the hospitality is taking like a great part of its economy. And the last one is the financial services, under which we have these funds being managed and the investment management entirely for the family and for the investments or for the investors. So here, if we are talking about buying assets in Europe, for example, or in the US, for the family, it used to be like some safe havens, if we name it rightly, in terms of the currencies. So Switzerland, let's say, like the heavy portfolio that we would like to go for the family. In terms of being hospitality, in terms of being residential, and this is the max that we go for it. But if we are talking about funds, it's somehow a bit different. We used to have also the same part of real estate in Switzerland or in places like growing up or getting into a right place like Italy, Greece. The scale here gets into some of the private equities, some of the funds, some of the direct investments through these funds to take a place, which is not taking a place in the family office level.
I was reading not long ago John Gray from Blackstone saying that in every investment they make nowadays, they make sure they, first of all, they understand how AI will impact the future of that investment. Is that something that you discuss in the investment committee?
The AI is making and paving the way for itself. The whole world is moving towards being automated. And as I said, the holding level is taking care of the family office and the funds. So with this structure itself, you have a lot of involvement of admin works that needs a huge resources. You need to make sure that you are making no mistakes, mitigating the risk of having any kind of false data, the speed, and the efficiency and quality. If I can say that the AI is not helping in this, so what else? The AI is helping very much in making sure that the admin work is being done flawlessly, almost, because again, you are not getting rid of the human impact or the human review at the end of the day. So the productivity of the people getting increased, it's getting it in a very high quality manner. It's getting the job also done in a very, very fast way compared to being done manually. This in the level of the business performance. So absolutely, the digitization of this structure is somehow the major topic in our table for with the shareholders, with the team as well, to make sure that not to decrease the number of people, but to enhance the facility, the efficiency of whatever we are doing, and to enhance the speed of doing it at a very high quality. Inevitably, this is something that's going to take a place, and it will impact heavily every industry. But I would say that having it prepped from now to accommodate such changes will help more and more into getting the impact in a positive way, if I put it in the right place. The AI implementation in the healthcare will boom the whole service level and the quality of the service, similar into the real estate, similar in every industry. So yes, it has an impact, but hopefully being prepped is going to decrease the negative impact and is going to enhance the positive impact very, very much.